Hey guys, so in this video I'm going to show you 5 common technical analysis indicators, trading indicators, which are quite common, and I'm going to show you how to use them. Um, I just want to start off from the offset that you need to be careful how well just when whatever indicator you use, most of them are lagging, which means they're a little bit behind. But however, you can use them or combine them. Combine the ones which suit your character, because sometimes there's no point in having like 10 indicators. Sometimes they tell you different things, and then you freeze and you don't know what to do. You use the indicators that you like, that you affiliate with, and then you you use what works. Um, so personally, I like the RSI. I find that very useful because it tells me when to buy, when to sell. That's to different points, sort of support and resistance levels. You can use your Fibonacci retracement even for that. So yeah. So, but basically, let's put it this way. As long as you're trading with the trend, even if you don't use, I mean, just the power of it. See, this is gold, okay? So let's just do this. Let's go to this one, right? This is the gold, okay? Um, use that. So this is gold. So even if you don't use any indicator, you buy sort of here, you're gonna make money. That's basically the #1 trading rule. You always trade, always trade with the trend, and always trade with the price action. So in fact, this is what I want to do. If you look at gold, right, in the last since after COVID-19, which was about 1500, it's now up to 1900. It's gone up by $400 in 4 months. So if you do the math, that's $100 per month growth. So if you just do it like that, and gold tends to trend quite well long term, especially that it's gonna, especially that it's gonna is this COVID-19 around, which means gold is still quite well backed. So in fact, I mean, what the RSI is a bit too high on gold, but once the RSI drops, I'm just inclined to buy a position, and without following any strategy, just simply by going with the trend and just ride it, and I have a good feeling about even just doing it that way instead of following strategy. But anyway, let's get onto this these indicators, right? So number one. So yeah, just allow me to stress again, always trade with the trend and trade with the price action, right? And then you use the indicators to guide you. So number one, sorry, let's see. Number one, RSI, Relative Strength Index. You type in RSI and then click on Relative Strength Index, and this comes up, okay? The ways to use the RSI, mostly I use it for overbought and oversold. RSI, traditional indicator, if it's above 70, it means the instrument is overbought. If it's below 30, it means the instrument is oversold. So when it's overbought, especially if it's above 80, like right now, like gold is like nearly 90, it's gonna do a reversal, because look, every time it goes too high, it comes back down and does a reversal, right? It does a consolidation. When it's oversold, it's the same. People buy it back. So that's what traditionally is used for, overbought and oversold. There's another thing that you can use RSI for, which is called divergent, RSI divergent. For example, right here, you can see a clear divergent. Basically, the price movement is here. Well, basically, let me show you here. See here, price is going up, right? RSI, RSI is going up, right? So this is the same, no difference, right? They're both sloping upwards, right? But here the price is going up, whereas the RSI, you can clearly see, is coming down, right? So that's what you call a divergent, when the price and the RSI does something different. So this RSI is clearly up, this is going down. So when that happens, you trust the RSI, and there's going to be a price sort of variance. So see, this is higher, higher high, higher high. So you think is an uptrend, but because this is COVID-19, RSI sensed it. Price actually went down, and RSI actually told you it's going to go down, and then it went down. So when you see a divergent like that, maybe don't trade up the way, even though it's uptrending, you know. So that's basically RSI. You trade divergent and is oversold. Next one, moving averages. So just put this speaker here. Okay. So moving average. Oh, sorry, not there. You go here. Here, this X thing, and then you type in moving average. Okay. Now the most common one is a 50 and 200 EMA. So we do 2 moving averages like that, right? We take the RSI off now, because a free version of TradingView only allows you to have 3. So here you go to here, you change this one to 200 closing, length close 200, and then you change this one to 50 and maybe red color. Oh, that's how I like to set it, but as long as it's different color, you can set it any way you want. So basically this one tells you that if it's an uptrending chart, if it's uptrending, the move EMA 50 will always be above EMA 200, and whenever the price is above, well, basically whenever, so you want to buy after the retrace, right? So you use this as a guide. For example, here you would have bought here, and then it goes up right here. When I see some red, you sell, and then once it goes green again, you buy here, and then you do the same. Once back here, you buy again here, right? So basically, you're buying, you're using these as guides of where you buy it, right? So this retraces and you buy again there. This retraces, you buy here, right? Retraces and then you buy here. You use these as a guide, and you use this to see what way the market's trending. Is a lot, and just bear in mind, EMA 50 and EMA 200, they are long-term trending. Okay, they're long-term trending charts. So you would use them on a daily chart mostly. You wouldn't use them on a like 5-minute chart, for example, okay, because they're long-term trending ones, okay. But on a 5 or 15-minute chart, short-term trading, what you use instead is SMA. So let me see here. Let's just go there. Here, moving average. So SMA is just moving average. You don't, not the E. Not the E, without the E exponential in it, right? You just click on that. So now that's SMA. You change 1 to 7, okay, and color green, and then you change the other one color red, and input 2. Okay, so this is more of a scalping strategy. Oh, actually, it should be the other way around, okay? So this one should be green, and the other one red. There we go. Okay, so and you'd only trade this with that. You do this on a shorter time frame, like maybe 5 minutes or 15 minutes or hourly or something. So basically, this is used for basically scalping. So whenever, if you go close, whenever the green line crosses the red line on the way up, when it meets here, you buy it, right? And go with the trend. I don't short things. I don't go against the trend, so I just buy. So I buy it here. And for as long as this green one stays above this red line, I'll stay in the trade. And when it comes back and touches the red, I sell it. And then I wait. And then you could, if you're confident, you could short this, but I don't do it. I don't go against the trend. So here, I buy it here again, and then I ride it. For as long as this green line stays above the red, I stay in it. And then when it touches back, I sell. Right? This is more of a scalping strategy on the 15-minute chart. Okay? So that's moving average. Now let's go to the next one, which is Fibonacci Retracement. So Fibonacci Retracement. Fibonacci. Oh no, actually, sorry, that's not even there. Sorry, I'm just I got a bit distracted there. So Fibonacci Retracement. Let's go to the daily now. Fibonacci Retracement is right here on the side here, okay? So this is a Fibonacci Retracement fork. Make sure you pick the right one, which is the Fib Retrace, right? So basically Fibonacci Retracement, if you basically you're seeing it's like a support and resistance levels, which the system works out for you, right? So you click. So basically you look at the most recent swing, which started here after the COVID-19. You click here. You drag this all the way up to the recent high. And this tells you all your support and resistance points automatically. This is a support resistance, this is a support resistance, support resistance, support resistance, support resistance, support resistance, right? And you'll be like, it's surprising how well this works, how it's amazing. Look at that. See how that's a support? See how that's a resistance? And this is now supported, and this one didn't come down here. And this supports so many, the price touched this level so many times, the price touched this level so many times. See, these are, if you don't want to draw your own support and resistance, just do a Fib retracement line, and then it'll tell you all your support and resistance is, automatically. And this can also be used for predicting the future. What your future is going to be like. Future support and resistances, right? So to do that, you go here and you go to the trend-based Fib extension. You click on that, you go you go to the most recent start of the swing, you swing it up to the where it swung to, and then you drag it back down to where the retracement ended, which was about here, right? So it went from here up to here, right? That's the uptrend. The retrace went down to here, right? And now this tells you all the levels, right? This here support, resistance, support, resistance. See how mostly accurate that is. See how this price touched that, price touched that, price this just so many times. And then this is another support, resistance. And then this tells you kind of where it might be going. So based on Fibonacci retracement future prediction, the gold is going towards the 1,980 mark soon. And then after that, if it keeps going, it could go up more and more. You know, so this is quite a good strategy to use for Fib retrace is another good one. So the next one, Bollinger Bands, right? Let me just get the Bollinger Bands. I'm trying to finish this in the next 4 minutes if I can. So Bollinger Bands, right? Click on that, right? Settings. I like to set it at. Wait, sorry. I like to set it at 2. Sorry. There we go. Input deviation 2. Yes, good. Deviation 2 is better than 1. 2 is good. So if you look at this, basically this is a Bollinger Bands telling you as a moving support and resistance, and it's telling you when it's overbought and when it's oversold. So whenever it touches the bottom line here, it shows it's oversold, so it's likely to retrace, go up the way, and whenever it touches the top, it shows it's overbought and it's going to retrace down the way, right? And this, so yeah, so and also use RSI together with this as a guide, just to make sure, you know, if RSI is above 80, it's definitely overbought, and this is also overbought. If both of them shows is overbought, then it's very likely that is overbought. For example, I'll show you relative strength index. You put this on here, boom, right? You see, way overbought, and this is overbought here, so that's quite accurate. That shows that this instrument is way overbought. So that's how you use this strategy. This strategy also is quite similar to your Keltner channel. There's also something called the Keltner channel. If you go to this here, I won't show you, no time, but if you go here and then you type in Keltner channel, and the settings quite similar, it pretty much looks similar to this actually, similar to Bollinger Band. It's just like the RSI is very similar to your stochastic as well. You can look into those in your own time. So one last one I want to show you today is let's just take these off. Also another one which is very important, I should cover, you should always have it actually, is volume. You should always see what volume, whatever you're trading, you want to see the volume that's been traded. In fact, this one doesn't support the volume. I don't know why, but some of them do. You know, like for example, if you go to here, they show you the volume. See, these are the volume bars, right? All the volumes. So these are important. It tells you how much interest there is, how much supply and demand, right? So one last one. Let's go to Ichimoku and try and do this in like just 2 minutes or so. So here you go to Ichimoku Clouds, right? Ichimoku Cloud. And personally, it's quite messy, but I like to just click on it, and then I want to make some changes. In style, inputs doesn't matter, all the same. Keep them like that. Here, lead 1 and lead 2, I like to make it nothing because you don't need them. They're just in the way, because then it's confusing with a lot of lines. I usually like to change some of those line colors as well. To this one, like to red. There we go, green, boom, done. That's it. I like to use, in fact, I like to change this to green. But basically, instead, because of time, I'm not going to do it. But basically, I like to use this as blue and then this one as green, right? I think we've still got enough time anyway. Let's do it. So this one I like to change to green, and this one I like to change to bluish color. There we go. Done. There we go. So basically, the Ichimoku Cloud is from a Japan thing, right? I'm going to try and finish this quickly now. As long as the green line stays above the red line and you're above the green cloud, okay, and this line is above the price action, price movement. So this line here, blue line, is above all this price, and then this green line crosses the red one on top. The green is on the top of the red, and then is above the green cloud, not above a red cloud, but above green cloud. You buy it, you go with the trend. Okay, same if you're shorting it. If the red line crosses below the green one on the way down, and this is below the price, and then you got some red cloud here, then you short it. But because this is the trend of gold is going up, you go with the trend. Always go with the trend. You win just by going with the trend. So this green one above red, and this above the price action above green cloud, for as long as it stays there, you can buy it. buy the thing. But make use of RSI, because don't buy it when it's overbought. Thank you.